Hi, this is Jackie Porter. Welcome back to my YouTube channel. This month, we're going to talk about taxes and why people get behind on their income taxes. So stay tuned for this month's timely tips. So I feel really blessed to have a practice where quite a few, I would say 80% of my business still comes from clients referring me to their friends and family. And one of the things that I've identified in people who have been referred to me is they're chronically behind on their income taxes. And so I wanted to talk about, because I think this month is close enough to the deadline that we can still do something about the late filers. And so I wanted to talk about tax avoidance and why people don't file their taxes on time. I've seen in my own practice that clients who get referred to me are typically behind 2-3 years on their income taxes. And so we want to dive into why are people behind on their taxes, because taxes for a lot of people cause them a lot of anxiety. And I think another part of it is, something that we don't like, we tend to avoid. So we put off doing taxes, and we have all kinds of reasons for not doing taxes. And then finally, I want to dig into the emotional cost and the stress, because what's keeping up a lot of the people I speak to at night is the worry of the burden they're going to owe CRA when it's all said and done, when they finally do get to doing their income taxes. So this month, we're going to focus on taxes. We're going to focus on how we can get a handle on our taxes and really start to dig into paying our taxes off sooner than later and planning to pay less for taxes as well. So stay tuned for this month's timely tips. All right, Sharon, you're back.
I am. It's
It's
that time of
it's
year
already
again.
March, and we're talking about taxes,
Right.
and we're talking about people who are behind on their taxes this month, which is a hard subject because I know lots of people are up at night that I've spoken to, people that you have ushered into the practice recently. And for those of you who don't know Sharon, Sharon is actually fondly known in our office as the office mom and client experience manager. Same thing.
Exactly.
So anyway, we really appreciate you. I wanted to dig into this a little bit more because I want to find out if what you're seeing, what type of clients are you seeing who are coming to us, who are getting referred to us or coming to our practice because they're behind on their taxes? What type of clients are they typically?
I'm finding there's a lot lately of self-employed. So these are people who have either just become self-employed in the past year or have always been self-employed, but they're either working in the business so much that they don't have time to get it all together. And so the pieces of paper are scattered everywhere. They don't
Right.
have a process.
Right.
And so they're now looking at the timeline to get this organized. Or the other ones are CRAs on their back because they haven't filed over a few years.
Ooh. Ooh.
Yeah.
So I want to dig into those things a little bit more. So the people who became self-employed, or who've always been self-employed. So for the other people, if you are a regular employee, you're getting a T4, the taxes are all taken care of for you. It's a wonderful scenario. You don't have to think about it. Sometimes you want to think about it because you're wanting some of that money that CRA has taken back, but that's another story. But for the people who don't, and they actually have to organize their taxes themselves, what you're telling me and what I'm seeing is that they just avoid it. They don't want to deal with it
until the final hour.
And so, we say they don't have time, but they're working in their business. They're working in their business hard, and it's something that they don't feel comfortable with, so they're just putting it off.
For sure.
And what I'm hearing, there's that group who are putting it off, who put it off for a long time, and so CRA is kind of like knocking at their door. And then there's the people who maybe, which is a good thing, they're recognizing, you know what, I don't understand this. I don't know what to do. I don't know what to do with the documents. And they're coming to us saying they're ready to have a conversation about how they should be organizing. They want guidance.
Absolutely.
On how
the tax strategies that they can be applying.
Exactly. And so I think that's really crucial because the reason to do it now, and what I'm hearing is one of the reasons they're coming to us now is if CRAs are already at their back, it's not a great scenario. You don't want to be that person because I want to talk a little bit about penalties. If you don't file your taxes by April 30th, what will happen is you'll face a 5% penalty, tax penalty. And then on top of that, you're going to pay 1% a month for all the months you're behind.
And that may not sound like a lot,
Oh, yes.
but it can add up.
Yes, we're talking, especially if you owe, a few $1,000s
Sure.
at the end of the year at tax time for taxes, and then you don't file, and then that you didn't file the next year, and some of the people we're talking to are 2, 3, 4 years
So what about
behind.
them? Some of these have
It's
thousands of dollars of delinquent charges.
exactly, and
Yeah.
so here's one of the things we recommend. If you're someone who's in that situation and CRA has not caught up to you,
Mhm.
then you can do something called a tax filer's self-disclosure.
Right.
And basically, if you reach out to CRA yourself and say to them, listen, I want amnesty for my
Amnesty,
taxes.
that's right.
I'm going to file. I'm going to self-report, because we're in Canada, so we have a
Mhm.
self-reporting system for taxes. If you get to them before they get to you, you might be able to avoid those penalties.
They are absolutely more accommodating than the other way around.
So that's a really, really important reason to do it now. And then on the other side of it too is it's really getting those professionals to help you.
Right.
When I speak with Nydia, we're going to talk about some options to do that, but having somebody to help you, getting a really good accountant,
Mhm.
getting a really good bookkeeper, those are really important pieces to the puzzle as well. And truly, it's so important. We think it's so important. We're going to include an article that I did a few months back on how to choose a really good
Yes.
tax professional, both a really good accountant and bookkeeper, what questions to ask, because your industry that you're in might not be similar to another person's industry. So you want to make sure the accountants and the bookkeepers understand the kinds of expenses you're going to report
Mhm.
and the kinds of opportunities to deduct that you should be taking advantage of specific to your industry. So
Right.
look out for the article. It's going to be featured in this month's Timely Tips. And thank you so much, Sharon,
Absolutely.
for bringing this to light. I'm really hoping that we encourage some of our listeners to go right ahead and make those phone calls. Thank you again,
My
Sharon.
pleasure. Yep.
So Nydia, for those of you who don't know Nydia, she is our busy bee. She helps me in particular organize all the paperwork. She's really busy this time of the year getting tax
Definitely.
receipts for people. And that's actually some of the things we're going to talk about today is talking about how to, first of all, how do people, what's the paperwork that people need to file their taxes? So we're going to talk about that. Then we're going to talk about what's the actual return look like? How should they be organizing their return? We're going to talk about the tools they need, and we're going to talk about choosing the right people to help. So,
That's right.
so let's start off, because I think these are really important things that our community need to understand in terms of getting ready for taxes, because this is one of the biggest reasons that people don't file is because of paperwork.
Right.
What paperwork should they be looking for or getting together, organizing when they're filing their taxes?
So you're going to need your T4s from work. You're going to need, if you made withdrawals from an RSP, you're going to need a T4 RSP. If you have business income, you're going to need a T4A. And also, if you have non-registered accounts and you have any capital gains or losses, you're going to need a T5 statement as well.
Right. And typically our clients, actually, what they do is they ask us to confirm that they have all their slips ready.
That's right.
If they have non-registered accounts with us, they have all their slips ready to make sure when they file, they have everything ready to file their income taxes. So that's a side note. And so once you have all the forms, then the other piece of it becomes, Nydia, something called a statement of business activities, a T215. And for those of you out there, and I know I'm probably going to date myself when I talk about filing, and there's something we're in a gig economy now, and so some of us are actually working full time at our job, but also engaged in side hustles. And side hustles can range from being the Avon lady, and I know I'm dating myself for those of you in our community, but it could also be that you're a YouTuber on the side. Any of those activities, even if you have a full-time job, you're going to get your T4 income, but you're also going to have to file a statement of business activities for your side hustle. Now, here's the cool part. Once you file the statement of business activities, what you're really doing with that is letting the government know how your business did. So the statement of business activities includes your income, your expenses, and if you made money or lost money. The income minus expenses is your actual profit, and that's what you pay taxes on, is your profit from the business. So let's say, for example, for someone who might have a business where they lost money. So you had a full-time job, you paid taxes on that, but then your side hustle, you lost money. So after you did your expenses, you're a newer business and you're still building it. And so you're spending money to make money, hopefully in the future. So your first couple of years, you're not making money and you have a loss. You don't actually have a profit. What's cool is you get to write that profit off against your other income, your full-time income. So that's a really cool reason I'd say to file taxes, because if you can get money back from your full-time job, that's a great reason to file. For those of us who aren't going to get any money back, just the fact that we can avoid penalties is a great thing as well. And you kind of know where you're at. And when it comes to paying taxes, it's always better to know than not know. It's like anything in life. You want to know what you're working with, and then you can plan better. And we're all about planning at Team Jackie Porter here. So that's the first thing. So we talked a little bit about the actual receipts that you need. The actual forms that you need. We talked about the statement of business activities and why you need every self-employed person, including people who have full-time jobs and side hustles, need to file one. So now let's talk about receipts.
Right.
Because again, most people don't want to deal with their receipts. Most people who are self-employed, I often hear from my accountants that their clients that I refer to them, unfortunately, and you guys know who you are, provide them their receipts in a shoebox. That gives me a really good idea that you actually know what your expenses are and you know what you can claim. Probably no. Probably no. So why is it important for self-employed people, you think, Nydia, to organize their receipts, and how can they do that?
So one way is they can use some programs, like they can record all the receipts in an Excel sheet and keep a running total, or they can use a software where they scan in the receipts into the computer and then upload those receipts to QuickBooks, and QuickBooks will keep track of your amounts as well. And the reason why you want to be able to keep track is because you want to know how much you owe, or you're getting back from the government at the end of the year.
That's right. There's no way to maximize your deductions unless you know where your money went. I mean, if you spent a lot of money on your business and then you weren't able to claim those expenses, then you're really going to pay more taxes than you should. Who wants to do that? Anybody have their hand up? Definitely not me.
Not me.
So finally, I think, we talked about that's one of the reasons receipts are really killer. Why business owners don't file their taxes on time, and getting the right advice to do that is important.
Right.
So picking the right people on your team to help you is really, really important. Picking a really good bookkeeper. I mean, if you're going to do it yourself, what Nydia mentioned, and we will have an article in this month's Timely Tips that will address what's the best software out there to help you, what's the best resources out there to help you pick something that will help you file your receipts properly and get you organized. But for those of you who want to spend more time in your business and not necessarily do that, pick a good bookkeeper. Pick a good bookkeeper and accountant who can help organize you, who can make sure you're maximizing your deductions. And we're also, as I mentioned before, we're going to include an article on picking a good accountant, what questions to ask, how should you interview them, why having an accountant who's familiar with your industry, why that's important. All of that's going to be in this article, so feel free to check it out. Thank you so much.
Well, and Jackie, isn't it true that the amount you pay for the accountant or the bookkeeper is also tax deductible?
100%. That's a very good point. So what you pay your bookkeeper, what you pay your accountant, I think the advice alone is worth its weight in gold in terms of giving you more time for your business, but you also get to write it off. Another expense, at least one that you can track really quickly as to another expense that you can deduct from your business. So very, very good point. So Nydia, after they get all of their documents together, they're getting ready to file their taxes, what's the next step after that?
They have to pay their taxes.
Oh dear.
Yeah.
And I know that nobody in our community does this, but this is one of the things, this is another reason why self-employed people don't file their taxes, is what happens is they plan to pay their taxes with money they've set aside, and then they use it in their business. And I know it's nobody that we know in this community, but for those of you who know a friend, that's kind of what they do. And typically the rule of thumb with taxes is you want to set 25% aside. This is what accountants recommend, 25% aside in a separate account. Because often when you take money out and use it for something else in the business, you're likely not going to put it back. And then before you know it, it's tax time. So, it's really important to stay on top of keeping money in a separate account and not using it for something else, but making sure it's earmarked for taxes because it's really not your money. I just want you to know, FYI. And so, what do they have to do after they file their taxes and
So
pay that bill?
that's right. So after they file their taxes, you also have to file an HST return if you make over 30,000.
That's right. And we plan to go into this in much more detail next month's Timely Tips when we're going to talk about what happens if you're a corporation and you have to file taxes, what do you need to know, and if you also file late for that as well.
Right.
So stay tuned for that. Thank you again, Nydia. Taxes are a major point of vulnerability for entrepreneurs, and that's one of the main reasons that the studies show they avoid filing their taxes, and why only 3 in 5 Canadians have filed taxes by the tax deadline. And so, one of the things that we talked about today in Timely Tips, how you can avoid being a late filer and paying tax penalties. One of the things you can do is decide that this year you want to stay on top of your income taxes. Decide this year you want to actually pay less taxes. And one of the ways to do that is to get organized around your taxes. One of the things you can do is you can ensure that each month you're making a date with yourself to review your receipts, to review your expenses, to find out exactly how much money your business earned and your business spent, to make sure you take advantage of all the deductions available to you. The other important thing you can do is get help. There are a lot of wonderful accountants, wonderful bookkeepers out there who can give you advice on how to set yourself up, how to organize your receipts, how to organize your financial affairs to pay the least amount of taxes possible. And a really good accountant and a really good bookkeeper are worth their weight in gold in your practice. Finally, do it now. Paying 5% tax penalty and 1% a month until you file, it's just not worth it. It's money that you could be using towards your business to build your business and to also build your financial future. We'd rather you use the money for that than to give it to CRA. So please make this year different. File your income taxes, get advice. Please check out the resources that we have available. We're going to provide in this newsletter an article on how you can find a good accountant and how you can find a good bookkeeper, and some really great tools to make sure that this year you stay on top of your receipts. So please check out our YouTube channel for all things financial. And thank you very much for tuning in to this month's Timely Tips.